Hello, this is the Chart Profit video, approaching 90 minutes into the trading day on Friday 4th of May. In the pre-open today I was talking about the Emini SP, mentioned the value area low at 25.95. This goes back to October. We have the controlling price here at 26.72, and we can see the value area low was tested briefly yesterday and the E-mini rebounded pretty quickly. So looking at the pre-open graphic here, E-mini SP on the left, here's that 7-month value area low, which is dotted at 25.95. We have tested that. I've said here the test was rejected and the E-mini reversed intraday to finish the session near the highs. If we see price acceptance down here subsequently, that would be a negative. I've also made the point that the 12-month controlling price could migrate lower, currently up here at 26.72, could migrate lower if a little more time is spent close to either 26.30 in here or 26.50. We have the 4-month up here at 26.47, so one of these areas of of price attracting time could migrate that controlling price lower. Not necessarily bearish, but it would alter our focus from this level, which currently means the E-mini is in a weak price location because it's below this, and it would alter the focus to one of these two levels if that happened, and we'd be more focused on price relative to one of these two levels. I've said here, should that happen, the value area low would also shift from the 7-month here at 25.95. That would actually migrate somewhere else. Currently though, the two important levels are up here, 26.72, and we've just seen that test there earlier in the week, and this value area low down here, which has been tested late in the week. This is the current chart of the spider. Been a slight migration in the 9-month to 266 dead. That happened on Monday earlier in the week, and this level is now resistance. We're printing below that point, so the spider remains in a weak price location. This is IWM, Russell 2000 ETF. The important level here is 153.50, that's the 1 year. The Russell is currently printing above that level. Small caps in a stronger price location than the large caps. This is the UK FTSE 100 index. UK's large cap stocks, boosted by the recent weakness in the pound relative to the dollar, made its higher low here exactly at the halfway point, a bullish pattern, and then printed above this resistance 74.13, which is the 18-month. These UK indices currently showing relative strength relative to other regions. This level here at 74.13 is now important support for the FTSE. Another European index, the DAX, looks to be ending the week above the halfway point of this high. That level, previously resistance, will now hopefully be support for this chart. Control is here at 121. Price printing time above that would put TLT in a powerful, strong position. Currently, chart is finding resistance at the natural level here, the half range that we talked about last week off this low. The 6-month controlling price has come into play here at 118.50. Price back underneath that level. Time spent here would suggest a new low. My hunch is, and it's just a hunch, that we will see this chart strengthen. First sign of that would be time printed above that halfway point there. I wouldn't consider the long side until I saw that. First sign of weakness would be time printed below the 12-month at 12.79. GLD, the gold ETF, printing below 125.23, which is the 4-month. In short-term analysis, that's weaker price location, suggests quite possibly a retest of the major down here at 120.90. In view of the strengthening dollar that we're seeing, that would seem to be a good possibility, but gold isn't collapsing here. Still within its recent range, albeit at the bottom, but gold remains in a longer term strong price location above 120.90, and if we could see the price back above 125.23, some time above that level, would certainly indicate higher. For a number of charts on various time frames, paying particular attention to where the controlling price is. We're looking here at the dollar index. We're looking at a weekly chart. On the weekly chart I'm showing the daily controlling prices, which go back a number of years, and when we look at the smaller time frames, say on the daily chart, we're looking usually at 30-minute price distributions and controlling prices. But I noticed midweek, looking at the dollar index, just trying to find evidence that this is a reliable low that we've just seen, and interestingly the major, I mean really a major level taken from the daily sampling has migrated to 89.54, so this is major support for this chart, and it happened right in here. Now that means that this previous level here, the major up at 95.50, is no longer the most important level in this chart, and we know that when a controlling price migrates, especially a major, it often precedes a directional move, and if that's what's happening here, then this is evidence that the dollar has indeed turned back up. I'll be looking to take any kind of buy signal above that level, with this point here, 89.54, being very strong support, long-term support. And as already discussed in previous videos, in here the major level on the Euro FX chart migrated up to 123.30, and I said the same thing that I've just said. The migration of an important major controlling price like that often precedes a directional move, and this one certainly looks to be down, which kind of confirms what we've just seen on the dollar index chart. The next level of support here is 117.55, growing evidence that this trend has changed to down. And on the British pound chart, we discussed and have been doing so for a couple of weeks in the pre-open, the fact that up here we had two tests of a major value area high which looked to have been rejected. We then started to print below the 6 month here, and I said that if that happened in last week's video, I said the next indication of further weakness would be a break of this trend line off the low, and that certainly happened again, further confirming most likely that the trend here has changed as well. We probably see a bounce, we're getting oversold, but I think the trend for these three charts in the major time frame has changed. Finish with a quick look at the sentiment indicators. The RIDEX ratio is a little lower this week, not really telling us too much at the moment. We know we saw a multi-month low in the index over here at this low, and an all-time high up here at the top, and we're kind of in the middle of that range currently. A little concerned that we didn't see more fear and panic indicated during the March sell-off, but at this point on the chart, which just shows the bull fund assets, we saw that the bull fund assets had actually registered its lowest level in a number of months, indicating some fear at this point. Right now this isn't too helpful. This is the public poll from AAII. We had lower bulls percent, higher bears percent this week, so an increase in bearish sentiment. The major thing to look at the moment, just to note, as we have been, that 3 weeks ago this poll got rather bearish, with the lowest bulls percent since September and the highest bears percent since March 2017. That was 3 weeks ago, and that was at this point here. And in the Investors Intelligence Poll, the newsletter writers, again 3 weeks ago, the bulls percent fell to 42.2. That was the lowest since November 2016. And this week the bears percent slightly higher at 20.8. That's the highest since December 2016. And you can see from the dotted line here that currently the black line, which is the 4-week moving average of bulls minus bears, that's at 24.6 currently. That's the lowest since November 2016. So there's been really an emergence of bears in this poll. 4-week moving average of net reaching a multi-month low like that will often mark a low in price, so we look for evidence especially with the E-mini in a weak position and no sign of the buyers. We may see that controlling price migrate. I want to see some green, some aggressive buying coming in on the chart, and some evidence that the buyers' activity is effective. That would be the first sign of improvement on the pulse chart here, which looks as though it is weakening. We're seeing, okay, it's a little bit volatile, but we're seeing recently neutral and red readings on the breadth, price momentum heading lower. It's almost at zero, and last effective imbalance up here was the sellers, this red down day, and as I said, we look at the high of that day, and that was never exceeded despite the aggressive buying on this day. So this chart's pretty weak. Okay, that concludes, and once again I thank you for watching.